Hey, Ruth,
Hi, Dominic.
how are you?
I'm good. How are you doing?
I'm great. Thank you so much. Thanks for having me or being a guest on my show. Thanks for having me as a guest on your show just a couple of days ago.
We had a blast, didn't we?
We did. We did. We were talking about some things.
Yeah, and gave out some really good information to my listeners, so I'm hoping to do the same thing for you.
I'm sure you will. I'm really excited to hear what you have to say because I don't think I've heard anybody talk about things the way you do. And this is
Is that
this
good or bad?
we'll see. We'll have to see. But we're talking to contractors here, and it's something you're very familiar with. Why don't we take a second, and so that everybody listening understands who's Ruth King and why you're talking to us, can you tell us a little bit about yourself?
Sure, I'm happy to. I've been working with contractors for 32 years, very, very soon. So I've been in and out everywhere. I've been in every single state working with contractors with the exception of North Dakota, and I even have a contractor client in Vancouver. I've spoken all over Canada and, as well as the United States. And my job is to help contractors be more profitable, get and stay profitable, give them the tools and the processes. I've written manuals. I mean, I have a 9-pound, 570-page manual to implement.
We're not going to go through that today, are we?
Oh, come on, why not?
I don't think the internet can handle
Drop it
that
on your
much.
toe.
Yeah. So you've been at this a long time, and your specialty, do you have a contractor type or?
I mean, I started out with HVAC, plumbing, electrical, generators. Now what I really realized is maybe the product changes a little bit, but the issues with labor, the issues with financials, the issues with growing a business are exactly the same. Doesn't matter whether you're plumbing, HVAC, electrical, pool and spa, generator, even, I hate to say it, pest control, because they have the same issues that we have.
They do. And I consider them a residential trade. I've
Yeah.
got pest control people listening here. And, I started, and you may know this, my other podcast is all for cabinet makers and architecture mill workers. 30% of my new listeners weren't cabinet makers, but they liked whatever they liked, I guess. And so they started listening. So we thought, hey, let's start Profit Tool Belt, and you're here as a guest for that. And it's just been amazing. I think there's business owners who get it or get what you and I are talking about. They're just looking for that info because there's not much out there.
No, there really and truly isn't. And I've been at it. One of the things I do is I call myself a Profitability Master because I explain financials in English rather than accounting babble. And you had a question about, was it Spanish or something along those lines? But, think about it. Most CPAs, when they write in this esoteric type of language that, it's hard to read. They don't write on our level. Many years ago, I started a nonprofit association to help adults learn to read. And one thing we found when we were doing all the research was that most writing is written literally on a sixth grade level. And we were talking with people who were really functional illiterates who couldn't even read on a first, second, third grade level. So we brought them up. And by the time we hit sixth grade level, you're fine because that's what newspapers are written on. That's what, a lot of books are written on. So I wanted to take what CPAs do a lot of times and write on for these college level PhD candidates and bring it down to something that you and I can really and truly understand without having to look everything up in a dictionary.
Well, that takes us to our topic because I think you made it pretty exciting. Why don't you tell people what we're going to talk about today? Because it kind of hits the point. If you don't get it at this point, you're never going to get it.
Oh, that's true. We're going to talk about how to tell if your financial statements are wrong in 97 seconds or less. Oh. I have 10 ways.
Why do we have to take 97 seconds to do it? None of us are patient enough.
Well, if you can't do it in a minute and a half, we're in real trouble.
I'm kidding. Yeah. So you've got 10 ways.
So when a commercial's on TV, you can watch it then.
Exactly. Yeah. Do it at that point. Well, I'm eager to know what they are. I mean, you've certainly got my curiosity going. So I'm going to hand it over to you. And why don't you tell us what the 10 ways to know are?
First thing that I wanted to make sure is everybody's on an accrual basis. Now everybody looks at me and goes, what's accrual basis? There are two ways of doing your financial statements. One is cash, one is accrual. In a cash basis accounting system, you do not have revenue until you physically get the money in the door for it. You don't have an expense until you actually write the check for that expense. So there are no receivables, no payables, no inventory. And as we all know, contractors have receivables, contractors have payables, and contractors generally have inventory. So doing your books on a cash basis gives you a false sense of security about whether you are profitable or not. Simply because, I had a contractor who called me on the phone and she goes, I read this thing about cash versus accrual with you. And she goes, I was on a cash basis because QuickBooks says you want to be on a cash basis, and I just assumed yes. And I didn't
All the
have
QuickBooks defaults kill us all the time, like the automatic preset to 30 days payment.
Yeah, it's just crazy.
No,
COD in my book, we can do it. So on an accrual basis, you actually record a sale when you send the invoice out. You record a bill when you get the bill in the door from the vendor, whether or not you've paid it and whether or not you've received the money. So then in those particular cases, you can match apples and apples. So you'll have receivables against payables in the same month, and you don't have what I call financial statement fruit salad. You have apple salad at that point. So what happens is on an accrual basis, you can really see whether you're profitable or not. So this person calls me on the phone, and she goes, all right, I read this, I changed it to accrual, and I always thought something was wrong. And I found out I'm losing my butt.
Oh, no. Yeah.
We solved it, but the reality was when you're on a cash basis, you're almost never negative because you're not going to pay a bill until you get the money to pay it, right? Unless you want to bounce a check.
Yeah. It's an old way of doing things. It's a conservative way of doing things, and you have to do it. You have to take advantage of the tools you've got, and that's why accrual's there.
Yeah, absolutely. And so every contractor is got to be on an accrual basis for operations. Now, a lot of times CPAs will change everything, which is one journal entry. Don't let them tell you it's any different, to move everything over into a cash basis to pay your taxes. So sometimes you're on an accrual basis for operations and tax basis for tax purposes, but that's between you and your CPA. And I don't care what any CPA tells you, operations is accrual basis. They can make two journal entries, one journal entry for sales and one journal entry for expenses, to move you onto a cash basis for taxes. It's not hard. It's easy.
So is that what I have to have in place before I can use these 97 seconds to find the mistakes? Like that's a
No.
No, that's one of them?
Yeah, some of them, yeah, actually. Yeah. Some of them, no. The second one is pretty easy. Does your balance sheet balance? You have no idea how many balance sheets I've seen that do not balance, all right? If they do not balance, that means, number one, somebody's playing around with your QuickBooks or whatever accounting software you're using, or somebody's stealing from you. Your assets have to match your liabilities and the fudge factor that I call net worth. And what net worth is, or equity, or those two terms are capital. All three terms are similar. And basically what that is, it's saying to you, okay, if you wanted to close your business tomorrow and you wanted to shut everything down, you would convert all of your assets to cash and you'd pay all your bills. And theoretically, what you'd have left is your equity.
Right.
But that never happens. And businesses don't get sold that way anymore.
No.
So,
Yeah, it's a holdover from old days, isn't it?
Yeah.
Yeah.
Absolutely. So the reality is your balance sheet has to balance. If your balance sheet doesn't balance, there's a real problem. Now, I'll give you a perfect example. I look at contractors' financials every single month. I mean, I have a bunch of them that I work with. And I got this financial statement in, and it was $2 off. And so I immediately sent an email to them saying, okay, your balance sheet is off by $2. It's out of balance by $2. And because I will not work on financials because they're not right if the balance sheet doesn't balance. And so he said, yeah, we found a $2 mistake in our bank reconciliation, and they fixed it, and then we went on. So you have to have a balance. I don't care whether it's off by $1 or off by $2. Your balance sheet has to balance.
Yeah.
Now, the other thing that you have to, if a lot of you may be using QuickBooks, QuickBooks occasionally gets out of balance. And so QuickBooks will ask you, would you like to rebalance the balance sheet? And the answer to that is yes. Okay, you want to rebalance the balance sheet. You have to be in single user mode to do it. And it will tell you all the error reports and what it rebalanced. So you can look and see, okay, what was that? What got screwed up when it got moved over or something along those lines. And QuickBooks is usually pretty good at rebalancing balance sheets.
Yeah.
If it gets out of balance. So just be careful with that.
So those are the first 2 points. Make sure we're on an accrual basis versus cash. And then make sure the
Mhm.
balance sheet balances.
Balances.
Yeah. And if
Right.
it's not, send your financial people back. And it's important to make a big deal of these things, because if you don't make a big deal of it, they won't.
Well, really long time ago, funny story. The brand new bookkeeper owner, he gives the owner the first set of financials, and the balance sheet didn't balance. And he looked at him, and he went over there, he said, never, ever, ever give me a set of financials where the balance sheet doesn't balance. And the bookkeeper said, do you know how to read this? And he goes, yeah, I do.
Got him on
So
that one.
that, yeah, bookkeeper got put on warning. Okay, the next one is negative cash on your balance sheet. All
Mm.
right. Now, lazy bookkeepers generally will print out all the checks for the month and put them on their desk. And then as the money comes in to pay them, send us checks. At the end of the month, if there's checks left over, you're going to have negative cash on your balance sheet. No banker is going to let you have negative money in your checking account. They'll close your account. So, you'll have bounced check fees, whatever else it is. You at least have to have a penny to the positive.
Right.
So,
watch for that one.
Yeah.
And sometimes it's not necessarily a lazy bookkeeper. It's that we start these businesses, or we run these businesses, and automatically our spouse, whether it's our girlfriend or somebody, or maybe somebody else in our family, we just tap them on the shoulder and say, hey, you're pretty good with math, right? Do you want to do our books? And they're not trained as a bookkeeper. They're not trained as an accountant. They've just been lassoed into doing it for us. It's not what they even want to do for a living, but they're just
No. And they also get in a situation where they end up with a lot of fights as a result of it. A lot of marriage counseling happens as a result of a wife who does not want to be doing the books.
I had a basement remediation business as a client, and the guy said to me, this was right at the beginning of the coaching, and talk about pressure. He goes, look, I already lost one wife to this business. I don't want to lose this wife and my new kid to this business. And I was like, oh, something has happened here before that we've got to watch for.
Yeah. What normally happens is the first person, you're starting a business, and the first person that gets hired is a bookkeeper, and the owner goes, I don't have to do this anymore. And they abdicate the responsibility rather than delegate the responsibility. And what they should do is hire a bookkeeper who knows what they're doing. It saves marriages. It saves issues.
Yeah.
I have a bookkeeping test if they would like it, and the answers. And my rule is they can't pass the test, you don't hire them. But I'm happy to give anybody who wants the copy of it.
You know what? Thank you. Maybe at the end of today, I'll make a note here and we'll tell people how they can get it. You have a bookkeeping test.
Yeah.
Okay.
And a lot of times, we think about it, we as contractors look at it from a perspective of sometimes we hire a service technician who supposedly has 10 years of experience, but they have 10 years of experience 1 year at a time. They haven't learned in 10 years. They just, the same for 10 years. And it's the same with bookkeepers, because there's a lot of them who have 10, 15 years experience. They walked into a situation that was all set up for them, and they don't have a clue what a debit and a credit is, and whether something's going in right or wrong. And you can't have that. You need somebody who knows what they're doing.
Yeah. Yeah, you need the right person. And it's tempting when you're starting out, you make that first hire, you go for the lowest buck. I can hire this person.
Not with your bookkeeper.
Yeah, I mean, it's one of your paid advisors, right?
Mm-hmm.
Absolutely. And great. Well, this is good. This 97 seconds has a lot in it.
It has a lot in it, but how long does it take to look at the balance sheet?
It takes nothing. Yeah, I mean, we're talking about glancing so far only at one report, which is the balance sheet.
Yeah, well, we'll get to the other one. Don't worry about it.
Yeah.
All right, so number 4, inventory. Is it the same number every month, or is it not on your balance sheet? All right, look, all of us have inventory. You can't grow to a $2 million contractor or $1 million contractor and not be aware of how much stuff, if you want to call it stuff, is going in and out of your shop every single day. You got to make sure you bill it. You got to make sure you account for it. You have to make sure that a tech isn't buying 2 and taking 1.
Those are the profit leaks, right?
Yeah. Well, you got that. At a time. Your profit leak. Yeah. So that's really important.
I've got a question for you, and maybe it comes under inventory. And I've seen companies deal with this two different ways. And it is
Okay.
when you've got waste material. So we go
Mm-hmm.
and we take out copper and brass from a job. It doesn't matter what our trade is. Some
Yeah.
companies say the guy in the truck takes the copper and brass and sells it on his own. Do what you want. Other
No, no,
companies
no.
say, no, 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 you bring it all back and we put it in the bin, and then we return that for money, and then we share that, and then we do whatever. We either take that as company money, or we put it to the company picnic, the company Christmas party, turkeys for everybody, that kind of thing. And so there's those two camps, right? The guy in the truck who takes out the copper and the brass keeps it, or aluminum, and the other one where you bring it back. Both of them cause so many problems.
Well, if you tell the guy in the truck that he can actually take the copper, he's going to take more than he actually should be taking. You're telling him it's okay to steal. He didn't pay for that. The company paid for that. All right. The guy in the truck who's bringing everything back is actually not really a bad thing because all he has to do is dump it in the bin. And he also, in a situation that you have with inventory, you should have a material sheet that should say how much you should be taking to begin with, rather than what I call a warehouse supermarket where he goes around and goes, even though they say I need 2 of these, I'm going to take 3. Maybe I need 50 feet of copper, but I'm going to take 100. And he just goes and takes what he wants. It's somebody who actually is responsible for warehouse inventory. And if you do the math, and I know we're not talking about math here, and that's probably a bad word that I can't really say is math, but if you do the math, you can afford a part-time warehouse person, even if you have 4 people, simply because that person pays for that himself or herself, simply because nothing gets lost.
Yeah, they're watching it. But by the way, the materials I'm talking about, the copper, the brass, the aluminum, is stuff they take out of the job that they're doing. The old corroded stuff, the waste
Doesn't
pieces.
matter.
And
Doesn't matter.
yeah, it no matter what, I've never seen an easy balance on that doesn't cause problems somewhere. There's always this, we call it the law of unintended consequences. But we'll talk
Yeah.
about that another time. Maybe we'll have you back to talk about that thing, because it comes up it's a big hairy beast that's lurking in every company with vans. But we're on
Well,
number 4, which is inventory.
yeah. Let me talk about one other thing. Inventory is a bet. You're betting your hard-earned dollars that you're going to be able to sell something that you buy.
Yeah.
Just be careful. Absolutely be careful.
I like that.
Right?
Inventory is a bet. That's right. Unless you know for sure it's going.
That's right. Then it's job material expense. So, all right, number 5 is, do you have negative payroll taxes on your balance sheet? The feds don't owe you money. The government doesn't owe you money. You owe the government money. Again, you're in a bookkeeping situation where the bookkeeper doesn't know what he or she is doing. It affects your payroll. True story. And the other thing that you really have to watch is that the payroll taxes actually got paid. I had a contractor that I worked with many years ago, and he believed in going local rather than, doing one of the big, paychecks, ADP, the national public things. And he said, I really feel that we should be doing things from a local perspective. And he had a guy who said, I'll do payroll taxes and payroll and all that stuff for you. And he went to the entire local community and basically signed up the entire community. So for about a year or two, everything was going well. And then about 2.5, 3 years into the relationship, he got a demand letter from the IRS that says, you haven't paid your payroll taxes for the past 6 months. And he goes, yeah, I did. And he sends it back and he sends the proof and everything else like that. And IRS comes back and said, we didn't receive the payroll taxes for the past 6 quarters. I see where you paid them to this company, but we never got them.
Oh, no.
So what he ended up doing was absconding with everybody in that community's money to the tune of millions. And the IRS went after him. I think he's probably skipped the country by now.
Oh, no.
But the IRS was very, very generous. And they said, well, we're not going to make you pay any penalties because you did it in good faith, but you still have to pay the interest in the back taxes. So he paid double payroll taxes for, 6 periods, 18 months.
Oh, man.
Be careful. Make sure they get put in. Make sure you see the statements that says, here's the proof that it was paid, et cetera, and make sure it's the right quarter, because that's another mistake that gets made a bunch.
Yeah. Hey, do you believe in having an outside accountant come in and check your internal accountant's work?
Once a year when they do taxes, you can, I don't necessarily say audited, but at least reviewed, especially as you get bigger.
Yeah. I mean, once a year is
Um,
good. It can save you some money, because nobody wants a headache like that. It's hard to, unless somebody's listening to this podcast and really understands the importance of this, getting dinged again for payroll taxes or for anything else. It's just not worth it. It's better to have, pay somebody to look over the books and make sure they're being done right. If you're not sure they're being done
yeah,
right, because people don't go into the trades because they were an accountant. They go into the trades because they're a good tradesperson, and they're suddenly
that's
forced,
right. Exactly.
right?
Yeah.
Yeah,
Yeah.
that's where you and I. That's one of the things we help with, and I think we recognize that, and it's okay for our listeners to understand. We know that's the situation. So reach out for the right kind of people who can make sure that that's easy for you. Yeah.
Absolutely.
What's number 6?
Number 6 is negative loan balances on your balance sheet.
Mm-hmm.
Again, just look at it. Normally what happens here is when the bookkeeper pays a loan payment, she takes the principal as part of expense, and it's not. Principal is you have a $500 loan payment, $100 of it is principal, $400 is interest. The only expense is interest. The $100 principal goes against your balance sheet. And so what that means is at the end of the loan, if she's taken principal and interest, then guess what? You're going to start showing negative loan balances on your balance sheet. Way to look at it is this. When you took out a loan to buy that truck, you didn't consider that $20,000 or $30,000 as sales. It was an asset. So when you pay for that back, it's only a reduction of a loan. It's not an expense. The only expense you have is the privilege of, bank gives you for interest for having that loan.
Right. The privilege of working so hard to pay back that loan. Yeah.
Yeah.
That's a great way to look at it. That's a great way.
It's interesting because a lot of times what happens is people say, okay, it's only a truck loan. Well, yeah, it's only a truck loan, but you have to make sure that that truck loan pays for itself.
Yeah.
And you have to make sure that it continues to pay for itself so that you can pay that loan back.
Yeah.
If you get a truck loan and it's $600 a month, you better be generating $600 a day at least to pay for it.
At least. Hey, I want to remind everybody listening, Ruth's going through this list. So far, we're at number 6. We're about to go to number 7, but don't worry if you can't take notes. If you're driving and if you're just if you're pulled over at the side of the road and you're scribbling on the back of napkins, because at the end of this, I've asked Ruth to share the document, and once we get there, she'll let everybody know how to download that. So just want to let everybody know that's coming. Thanks, Ruth. I don't want to interrupt you though. You're on to number 7 now.
I'm on to number 7, negative gross profit on your P&L. Okay, this is you said, are we getting to the P&L? We're getting to the P&L. So if you have a negative gross profit on your P&L, that means you bought a part for $6 and you sold it for $4.
Yeah.
We don't do that.
We don't want to do that.
I know of.
Yeah. We don't want to do that.
The idea is not to do that. So if you have a negative gross profit, we go back generally to what I call apples and oranges again. You have the revenue in one month and the expenses in another month. So one month you have great revenue, no expense, and your gross margin looks wonderful. Oh, I should probably explain gross margin or gross profit. Gross margin is gross profit divided by sales. So on the profit and loss statement, you have revenue or sales, subtract out your direct expense, which are anything that's an expense because you sold something. Labor, materials, equipment, freight, commissions, subcontractors, things like that. You would not have had that expense unless you sold that job. And then your gross profit is what is left after those expenses. And if that's negative is when you have a situation where you either have revenue in one month and expenses in another, or somebody screwed up big time on pricing.
Yeah. Hey, and that can happen. It can happen in both directions, right? You might go to your supplier and they've got a certain type of condenser unit on sale after you've already paid. There's things there that can cause problems. But gross profit is what we're here for. We're actually here for profit.
Yeah, last I heard. I don't think we're in this for practice anymore.
Yeah. Anyways.
I mean, we got to make profit. That's the goal. And profit is not a dirty word. And profit is not a bad word. And profit is not a 4-letter word.
No. No, profit's the reason that we're in business. You know, if we're not making a profit, we're not able to employ people, which is what we do in the community. You know, we should all think about this. The work that our listeners are providing to other people is what allows them to put their kids in travel soccer teams and put their and take their kids camping and buy a camper and a trailer, and all the things that families need to do is what our listeners are providing them with. We have to make a profit so they can do that.
Yeah. And keep a roof over the heads of their employees and food on their tables and all the other things like that, so that we don't lose our employees, unless we want to lose our employees. There's times that you do that. All right, number 8, no rent expense.
Sorry, did you say no rent expense?
Yeah, so in January you have double rent, in February you have no rent. Or January you have double utilities, in February you have no utilities. Somebody's being lazy. You have rent and utilities every month. You can't put 0 in one month and you can double it in another. It screws up your profit, right? The month that you have no rent, you have much more profit. The month that you've got double rent, you got much less profit. Let's make it real and have rent every single month and utility bill every single month and a telephone bill every single month. You know, it's kind of looking at that. So
yeah.
Now,
when we're buying like software systems, Ruth, and you know they give you that opportunity, they say, well, it's a $10 software per month, which is $120 per year. But if you pay it all now, it's $60 just to make it easy. So what do you want me to do? Do you want me to take that $60 and divide it by 12, or do you want me to just take that expense once and see it once, even though I'm using the product throughout the year?
So what you do in January, let's assume you did it in January. In January, you have $5 of software expense and $55 of prepaid expenses on your balance sheet. And February, you've got another $5 of expense, and you now have $50 in prepaid expenses.
Prepaid expenses, yeah, thank you. That's what I was looking for. It's prepaid expenses, but sometimes a bookkeeper will say, well, you paid it, money in, money, it's gone.
No.
Yeah.
We're not on a cash basis, we're on accrual.
That's right, yeah. Good, thank you.
So. Okay, number 9 is kind of tricky, all right? So what you do at the end of the month is you look at the bottom line of your P&L, and whatever number that is, hopefully it's positive, you have to make sure that that is the same number that is on your retained earnings on your balance sheet, all right? So your net profit for the month has to equal what's in retained earnings on your balance sheet for that month. Otherwise, somebody's screwed up. Somebody is stealing from you.
Yeah,
I can do that.
They can, yeah. I know that was our conversation on your podcast. That was it's such a downer. I mean, it's a reality though, isn't it?
Yeah, it really is.
So at the end of the month, look at the P&L and make sure that the P&L at the end of the month is the same as the retained earnings on my balance sheet.
Correct.
Yeah. I'm glad this is all in a list that we can download later, because it's tough to listen while you're driving or walking the dog or at the gym and take notes. So this is good.
Yeah. All right. And then the last one is, do your aged accounts receivable and aged accounts payable reports match the value shown on your balance sheet? So if your aged accounts payable report says $100,000, then the amount on accounts payable on your balance sheet better say $100,000. Another way I can steal from you. Real easy.
Not you, Ruth. Not you. Other people.
Okay.
Yeah. That is fantastic. And so that's how, are those the 10 things?
Those are the 10 things.
So in 97, and you're right. I mean, I'm only glancing at 2 reports here, the balance sheet and the income statement. If I don't have a bookkeeper, if I'm doing it myself, it's just extra work. You know, we don't cut our own hair and we don't do our own dental work. So why would we be doing our own bookkeeping?
I agree. We didn't start our businesses to be bookkeepers. We started our business to do really cool things for people.
Yeah, to build stuff, fix stuff, make stuff, break stuff. If you're in excavation, your job is to break, demolition and excavation. Well, whatever you do, yeah, you're right. You know, we have to go do what we're good at. Yeah.
And then you delegate, but you don't abdicate. You as the owner are totally responsible overall for all the money that's in your checking account and your profitability.
You know what? You just brought up a word there. I was going to ask you to define it earlier. You don't abdicate, you delegate.
Right.
What does abdicate mean? Because I don't know if everybody knows that. I remember that word, the first time I read it was in Michael Gerber's E-Myth Revisited, the abdication of authority. So
Yeah.
give us your take on what abdication is.
Abdicate basically says, I don't have to deal with this ever again anymore. That's the responsibility of my bookkeeper. So what? I will never look at a P&L. I'll never look at a balance sheet. That's her responsibility.
Yeah.
And then she steals $500,000 from you. The abdication means total, you don't have to deal with it anymore. You've totally given it away. It's not your responsibility anymore.
Yeah. It's a tough thing. You know, being a business owner is not easy. And people think it's easy because they see us driving shiny trucks, towing big boats, living in beautiful cottages in the sun. Isn't that what you're laughing? Isn't that what we all do as contractors?
No, not all of them.
But people think it's easy, and it's not. It is, for those of you out there listening who've built your business, we take off our hats to you because you've done a very important and tough thing that most people will never be able to do.
Yeah, absolutely.
Yeah. Hey, I want to get that report in the hands of my listeners. I think it's fantastic.
Okay.
And you mentioned a bookkeeping test too, which would be fantastic. How do we get in touch with you to get that? What would somebody do?
All right, you just send me an email. It's rking, R-K-I-N-G, at ontherribbon, ONTHERIBBON.com.
ontherribbon.com. So rking at ontherribbon.com.
Right.
Thank
Send
you.
me an email. Happy to send you everything, and hopefully you use it and do really well with it and increase your profitability. That's what we're here for, right?
Yeah, well, and you can't go wrong. Ruth, you've been doing this for 30 years?
It'll be 32 years in 2020.
I forgot dude rule number 1, never ask a lady how old she is or how long she's been working in a position. Ugh, God.
Well, I don't look as old as I am, and that's really good. And number 2, I love what I do. I have helped hundreds of thousands of contractors now over the years increase their profitability and increase, achieve the goals they want to achieve, really.
Yeah, I can tell you love it too, because you've got a story for every point, and you got a big smile on your face. For those of you who are listening to the podcast, I'm recording Ruth on video as well, and then we'll be posting that to YouTube later, so you can watch this live. What a lot of people like to do is just listen to the YouTube video while they're working at their desk, and then it's playing like the podcast. They don't have to necessarily download the podcast. Ruth, thank you so much for being on the show. Hopefully we can be guests on each other's shows again in the future, because I think you've got a lot more stories in you and a lot more other cool tools that we could take advantage of. So I'm looking forward to having you back on.
Likewise, I'm looking forward to having you back on my show, because we always have this phenomenal conversation that ends up doing really, really good things for our listeners, which is the end game.
That's right. All right. Thanks, Ruth. Have a great day.
Thanks, you too. Bye.